Okay, hello everyone. Welcome back. This is Zen. Really excited to be with you guys today. Have a lot to talk about. Okay, hello. Let me get this all set up. You guys watch the videos from the Liquidity Hub and Ripple? Yo, what's going on, everybody? 14 people. We are live. I'm going to show you a quick video from the main stream real quick. Where is it? This is kind of a lot of the stuff that we've been talking about lately with DeFi, decentralized finance, how it's going to take over Wall Street. I saw this video. This video is a month old. It's from CNBC. So check it out real quick. I'm going to review. While we wait for this room to fill up with some more people, I'm going to have this playing. So let me get this started. Now, keep in mind, this is mainstream propaganda BS, but they actually didn't do that bad of a job with explaining everything. But the companies they show, they're going to point you in the direction of Ethereum that charges all these gas fees and all this stuff. We know that network can't basically handle the speeds of all the money like the XRP ledger, Stellar, all the different projects we're talking about. So ignore the projects that they're talking about in this video. Just throw those out the window and just kind of just hear the big picture of what CNBC is talking about. Where do I do this? Share computer sound.
Crypto is on the verge of...
One thing I want to stop and say real quick. Notice how this is HSBC. We know HSBC knows what's coming. They're fully on Ripple and XRP's team. And that's the thing. The mainstream's never going to tell you about XRP. They're going to point you in the opposite direction. What's the metaphor that I always say? Gold. If this was a gold rush, do you expect people to point you in the right direction to find gold, or are they going to point you in the opposite direction? They're going to point you in the opposite direction, I think. So let's watch this video from the mainstream. Actually, it's pretty on point.
Revolutionizing traditional financial systems. Advocates say it has the potential to make the current financial system more efficient, accessible, and faster. We're talking about decentralized finance, or DeFi, a financial system without banks, at least in the traditional sense, without a middleman executing your transactions. Instead, you have smart contracts, or computer code that automates the process.
Anything you would go to a traditional financial institution for, like high-yield savings, borrowing, lending, trading, investing, those are all things that can be found in DeFi.
Decentralized finance has captured only 5% of the crypto space, but it has attracted massive growth. There is $93 billion worth of DeFi assets in the crypto market as of June 2021, up from $4 billion just 3 years ago.
The really massive creative power of DeFi is how quickly developers can iterate and build financial applications. That was really never possible in finance.
The pace of DeFi has slowed since the summer of 2020, and regulatory scrutiny from Capitol Hill has spiked over fears of crypto's checkered past. Here's how decentralized finance works, and why lawmakers and the financial establishment are keeping an eye on it.
Lucky for you, nothing keeps you connected like AT&T 5G.
Is that fast?
Oh yeah, it's fast.
Reliable?
Definitely is.
Secure?
Oh yeah, it's secure.
Love it.
It's not complicated.
Man, they don't even give us a choice to skip ads anymore. This is ridiculous. Let me get back to it.
An ecosystem of financial applications and projects built on top of blockchain technology.
The whole point is that they're decentralized, which means that whoever you're transacting with, you're doing it directly with them rather than through a traditional financial institution like a bank or an exchange or a brokerage. So rather than having one of those traditional entities mediate the transaction, it's mediated by smart contracts, which are self-executing contracts according to the code, which, includes the details of the agreement with you and the other person.
Most DeFi projects are built on Ethereum because it was one of the first programmable blockchains that can handle smart contracts. Most DeFi protocols are governed by their own communities, or what's known as a decentralized autonomous organization, DAO for short. Only the members who've invested in an individual project's token get to vote on the protocol's future. It removes the control from one person. The crypto industry was born in reaction to the 2008 financial crisis. DeFi's goals stem from that and give users control and visibility of their own money without a third party.
A mainstream user can either decide to go directly and use these protocols, or might be indirectly using some of the traditional financial intermediaries at the same time. But the main difference here is that the user will have a choice that you either can rely on someone, or you can manage your own cryptographic assets and your keys by yourself. And it brings kind of like the finance as a human right for the users.
If we start to see DeFi actually impacting things like making it easier for small businesses to access credit at a larger scale, easier for people to access mortgages or other kinds of examples of providing some sort of real benefit, then it'll actually start to be easier to understand sort of how it works and the point of it.
During the summer of 2020, interest in decentralized finance began picking up. The total value locked in the space grew from $7.8 billion on June 20th, 2020 to $19.4 billion on September 21st, 2020. The total value locked is a metric used to assess how much crypto is committed to a smart contract of a project.
Since 2018 to 2020, we saw the rise of automated market makers, which for the first time bootstrap liquidity and allowed these decentralized exchanges to become much more liquid than they were. And at the same time, we also saw an increased development activity on the user front end and made these applications much easier to use.
Most DeFi projects or protocols can be categorized into four main buckets: decentralized exchanges, lending platforms, asset management, and derivatives. Decentralized exchanges and lending platforms were the areas that grew the most during DeFi summer, so we're going to highlight those. Decentralized exchanges, or DEXs, are cryptocurrency exchanges that allow users to trade without giving control of their funds to an intermediary. One of the leading DEXs is Uniswap, an automated market maker protocol built on Ethereum that has risen due to its liquidity offerings.
So a lot of crypto assets try to do everything. Uniswap does one thing. It tries to compete with Coinbase. And it's interesting because there is massive trading volume on Uniswap. It's trading $40 or $50 billion of crypto per month. It's generating hundreds of millions of dollars of fees.
The developer of Uniswap, Uniswap Labs, is currently under investigation by the Securities and Exchange Commission. Decentralized finance allows anyone to borrow and lend cryptocurrency. Users can earn interest when they loan their assets. They can also borrow other cryptocurrencies by using their current funds as collateral. Stani Kolechov is the founder of Aave, one of the first and leading DeFi lending protocols.
Cryptographic assets these days can be Ethereum, so-called stablecoins. Aave protocol allows actually to supply these kind of assets into the protocol, and then there are other participants that are taking those funds out of the protocol against a collateral, which means that it generates yield for the suppliers. It's a place where you can grow your cryptographic assets in form of interest yield.
DeFi continues to expand, and you go from 100 billion to 500 billion, 600 billion. The banks are going to have to start realizing, hey, there's actual real competition here as assets are flowing into the DeFi ecosystem and away from us.
Decentralized finance has attracted Wall Street veterans and developers alike. It has pushed crypto's potential from being simply a digital currency to a software tool that can be used to improve the antiquated traditional financial system, thanks to the programmable qualities of Ethereum.
The thing about crypto that gets traditional financial people so excited is that as a technology, it solves all that. It allows money to move onto the internet. It allows you to program money. It creates digital property rights. It introduces efficiency and creates the potential to disrupt an industry that is one of the least efficient in the world.
Investors have been on the hunt for yield as interest rates remain low. DeFi protocols have offered opportunities to chase yield through a method known as staking.
A lot of these assets you can stake and you receive a reward, and that reward gives that token some value or some aspect to it that you can then kind of derive what that asset should kind of be worth. There is almost like an income that can be generated from staking these rewards, from mining it, or some other process.
On the institutional side, a lot of the ones that you're seeing start to jump in are the hedge funds. They are able to be a lot riskier, so they're able to experiment more.
One of the key drivers is that there is a lot of need for leverage. So many of these protocols, what is happening is that you are able to unlock capital, and to unlock capital, when you deposit, let's say, cryptographic assets into the Aave protocol, you're borrowing cash, which means that you need cryptographic stable coins. And that means that the yield on that cash and the cost is going higher. And what usually is the typical use case is that you take the cash and you buy more of that particular asset and you are leveraged position. Decentralized finance is like the electric car in the automobile industry. So, everyone kind of knows that that's the future, but car companies will still make cars. They will just make electric cars instead.
Regulatory concerns, though, continue to hang over the entire cryptocurrency industry and could stunt DeFi's growth.
There's not a lot of KYC implementation that could even be collected because a lot of this is just a decentralized open source system. There's not really an account that's collecting information. So some of the information sharing agreements and stuff like that you see in traditional markets, it's hard to replicate 100% into DeFi. So what needs to happen is probably a more nuanced model and a new regulatory framework. Now, I think we are starting to see some of that. There could be some cases where this infringes on DeFi and it could hurt some DeFi assets, but it could also be a case where you establish a more mature DeFi ecosystem where you actually see more growth.
DeFi comes with a huge risk because of the lack of regulation. Investors and users have no protection or insurance if they lose their cryptocurrency in a protocol or through loaning assets to another user. The risk is well known, but with the huge risk comes huge gains. For traders, the crypto markets remain volatile. In March 2020, a sudden 30% price drop in Ether triggered chaos in the DeFi space. Some investors lost all their collaterals in protocols like MakerDAO. MakerDAO, once considered the DeFi poster child, has been blamed for not fully representing the risk to investors.
So I paused it real quick because before we keep going, I want to let you guys know, because we've been doing a lot of research into the Flare network and Songbird, a lot of these horror stories will be solved and take a lot of that risk out of the equation with protocols like Flare network and Songbird, which is why they're delaying, because basically they're delaying because what did they say right here? Lack of regulatory certainty, which creates a risky environment. So I believe that Flare, the reason why they can't issue all their Songbird tokens to the major exchanges, and the reason why they're delaying the Flare network, because all the exchanges like Coinbase, right after Flare announced their airdrop, soon after that, the SEC came down on XRP with the lawsuit. So a lot of this, like the loaning your assets and not keeping custody of your assets, that's all solved by Flare network. So let's keep watching this. It's almost done. And then I'll answer some of you guys' questions. Put your questions in the live chat right now, and I'll get to them once this video is done.
But it was a case that the system hadn't seen before.
It was a disaster, but the Maker protocol and the whole space was able to recover from it. I mean, pretty much instantly. Afterwards, the Maker protocol and the community, they then just were able to analyze the situation and then make a whole bunch of adjustments and upgrades to deal with future situations like that.
DeFi summer didn't fix these issues and arguably has led to the rise of gambling protocols in some parts of the space. Still, optimists in the space say MakerDAO's rebound proves DeFi's strength and room to improve.
You can really see the sort of evolutionary potential of decentralized organizations, because anytime there is a loss or defeat, I guess you can say, becomes a really important learning opportunity to then overcome that problem and create resilience.
It will be some time before DeFi can be used in the real world and becomes a household name. But as the crypto space grows, investors are going to continue holding on.
A lot of people in crypto and a lot of institutional investors that are looking at this space really are thinking over a long term. And I think that if you have the patience to wait that out, you're going to see which companies are able to be tested and emerge out of it and continue to be successful.
Hello, everybody. It's Thursday. Welcome to the Zen Lounge. Hope you guys enjoyed that clip while we let the room fill up. I thought that was a really good reporting from CNBC. What's one of the reasons why I believe we're not going to be going into the same cycle that we have the past 2 times? The third times, I believe we break the loop, and there will be no bear market, because just like yield blocks, if you guys remember the yield blocks YBX DeFi project on Stellar Network, what did that video CNBC just say? They basically just said that investors are looking for yield opportunities. They're looking ways to basically make a return on their investment, passive interest. There's not that many opportunities out there right now to do that, and DeFi, decentralized finance, is allowing people to do that. So most of the time, people, like last bull runs, they needed to wait for price to go up and then they could cash out. Now there's actually incentives for people to keep their money on the Stellar Network, to keep their money in these protocols that actually earn yield. So that way, people have no need to pull out profits all the time because they got yield coming in. There's more of an incentive to leave it on the blockchain than there is to pull it out into dirty, disgusting fiat. So that's why I believe that we're entering, someone said the utility bull run. We're slowly starting to see the utility bull run right beneath our eyes. We see the liquidity hub opening up, introducing Ripple Liquidity Hub, a one-stop shop for enterprises to source any tokenized asset. Yes, really. For your customers from liquidity venues like MMs, some fancy coding language I don't understand. I'm not a technical expert here. You guys know that. But they've been using this product internally for nearly 2 years to source XRP liquidity from broader market for on-demand liquidity flows, and now making it available to our customers as well as enterprise ready to be ready for inevitable crypto first future. Liquidity Hub opens for GA in 2022, starting with XRP, Bitcoin, Ethereum, Bitcoin Cash, Litecoin, ETC, with plans to add other tokenized assets like NFT capabilities, like staking, yield generation. This is just the beginning. Staking, yield generation, that's what all the investors want. If they're able to stake and earn yield on the blockchain, why would they take their money off the blockchain? There's not going to be a big bear run like most people will say. Brad Garlinghouse is super excited too. Today we announced a new product at Ripple Swell Liquidity Hub. Any enterprise that wants to offer crypto to their customers, you could source tokenized assets from Ripple via Liquidity Hub. Soon to come next year, 2022. Yeah, so 2022, a lot of people have been predicting that was the year. I mean, ISO 20022, wouldn't it make sense? It's right in plain sight, pretty obvious. And everything is just launching off right now. Solo, shout out to NYSE Network and everything that they're doing over there. Blasting off. One Solo is worth more than one XRP. $1.47. I don't know. I'm not a chart expert, but you tell me. What does this scream to you? To me, it screams bullish. Only 200 million tokens. That more XRP people are beginning to talk about it. Imagine if Bearable Bull makes a video about Sologenic. It's going to go to $3 really fast. Let me show you some math. So here are some comparisons that we can compare Solo to. So major decentralized exchanges, their DEX market cap. So 1 inch market cap, 775 million. Uniswap is 16 billion. PancakeSwap, 4.5 billion. SushiSwap is 1 billion. Sologenic's market cap is only 283 million. So ridiculous potential for XRP's decentralized exchange. Right now, it seems like they're testing a lot of these, like XRDOs could be a giant test run for the institutions to make sure everything's running smooth, and then they start issuing tokenized securities, these major billion-dollar assets on this thing. You think it's going to surpass a name Sushi Swap? You think Solo is going to pass Sushi Swap or 1inch or even Pancake Swap? I believe so. So super bullish XRP Ledger team to the sun. I support everything on the XRP Ledger. That's going to be it's going to be big. So shout out to everybody uncovering all the information and research into Sologenics for the XRP community. It's going to be a big craze. What did we just hear from CNBC? DeFi summer. DeFi is the new wave. DeFi on the XRP ledger is going to be better than DeFi on Ethereum. I'll tell you that. It's pretty obvious. So super bullish. I also just love the ability that you can't censor the XRP army. We're going to be rich, powerful, and you're going to hate us. You're going to want to censor us. You're not going to want us to do what we do because we're going to be so powerful. And guess what? You're not going to be able to stop us. We're still going to be able to go decentralize and do our business on decentralized exchanges and keep running these markets up, because what's going to happen after XRP moons and we have serious resources and capital, we're going to need to keep investing in more projects, and this will allow us to do that with a cold wallet. You could do this. You could trade with your Ledger. You could trade with your Zum. You basically just scan your QR code and you're able to access this decentralized DEX, and there's going to be tons, like 40,000 assets on this. In their white paper, they specifically show how you could trade Tesla with your XRP. And the Solo tokens are basically going to be used as liquidity. And you could even use your Solo tokens basically to be a liquidity provider and earn yield. So I haven't gone deep and made a deep dive. I wasn't even planning on talking about this, but it's running up right now and it looks like it's going to keep running. So might as well talk about it. But yeah, this is everything is looking good going into December. XRP went up a little bit, went back down, been going touching $1.30. It's going to keep climbing. But that's all I really have to talk about. I don't really have much to talk about. I have a appointment in 5 minutes, so last chance to ask me some questions. I like Solo, but and what it's about, but their user interface needs to get updated and make it flow better. Well, if you wait for the user interface to flow better and to get better, you'll wait until Solo is $10 to make that decision, and the train would already have left the station, in my opinion. That's why I'm Mr. Solo Dolo. You got to see what's coming before other people see it. And luckily, I had some friends that pointed me in the direction to Solo, and it's one of my big holdings now. So someone else, what's my thoughts on Ply? Ply is part of XDC. So XDC, I mean, all that stuff, WTK, all that stuff, it's going to be bullish. The tokens, another token we haven't talked about in a long time is, I mean, everything's pretty bullish right now. Bifrost is safe. Where do you buy Solo? You just buy it on your Zum. You buy it on your Zum. Yeah, so some more news that just came out about Solo too is that the team tokens, everybody kept leaving hater comments in my YouTube saying it's impossible for the math with the tokens. Well, none of the team tokens qualify for the airdrop. So that leaves a good chunk of Solo that won't be qualified for the airdrop, which leaves more tokens for us. So yeah, a lot of people are really pessimistic about everything, and and they don't see the opportunity. And this will be like $10. It's going to be a lot harder to accumulate and get that 5x solo airdrop. So Solo Medium for more information. What are your top picks for Lobster and Solitern Wallet? Well, everybody knows. You can go back to my YouTube page and see my top picks. I made them. I made a lot of the Lobster and Gem videos a while ago, but this one recently went up to 50 XLM each. This shit was 50 XLM. It hit a high of 50 XLM. There's only 80 million YBX. And it dropped because everybody got airdropped their YBX. And this is built for institutions. You could read their papers, read all into this, read the docs here. There's 6 different utilities to earn yield. That's why it's called yield blocks. And there's only 80 million of these tokens. Bunch of people got airdropped their tokens and they've been dumping their tokens. So currently it's only $1. So it drops massively. So I'm keeping my eye on this to see if it keeps dropping. I know at a low it was only 2 XLM YBX. And right now it's like 5 XLM. So if it goes back to 2 XLM, this is going to be dope. The problem with this is the airdrop is going to be going on for some time. So like there's going to be a lot of selling pressure with the airdrop that's happening over a period of time. But most people were smart and chose to stake it. So you could stake this and earn more YBX instead of just getting a quick buck. So YBX is legit. Of course, everybody knows about Stronghold and SHX, World Bank partner, some of the biggest people in the world behind SHX. There's a huge Aqua token airdrop, and on my website, I gotta go. I have an appointment right now at 10 Pacific Standard Time. But what was I talking about again? I have a new airdrop opportunity on my website listed. I think this one's gonna be big. First come, first serve on this airdrop. It's on the XRP ledger, and they're building businesses and stuff on the XRP ledger. Airdrop. And there's a lot of hoops you got to jump through to get this airdrop. So I think it's going to be like YBX where it's high value. So go to my website, the Zen Lounge, and check it out. There's an airdrop opportunity. If you do not know, if you do not active on your ZUM or Lobster, get active on your ZUM and Lobster. There's so much happening beyond just XRP and XLM. There's so much happening underneath the surface that most people aren't aware of because they're not participating on Lobster and ZUM. Lobster, there's shitloads of airdrop opportunities. Aqua is going to be doing a 3-year basically wealth distribution via the Aqua token if you set up the airdrop trust line with them. So for anybody that's involved in crypto, I highly recommend to participate in the ecosystems and find all the ways to earn airdrops, rewards, yield, all this cool stuff that's happening. So I got to go. But everybody, thank you guys for supporting me. Thank you guys, everything. Thank you guys for everything that you guys do for me. And